Good morning, folks. It's about quarter to 8 GMT time on March 23rd. I'm going to take a look at Forex opportunities for the week. Because of the FOMC reaction last week, we're going to take a look at some of the majors and minors. And the crosses are probably going to take the direction from their major and minor counterparts. So let's take a look at Pound USD first. You can see that we did not close above 1.5, which is a pretty good indication that we are still in the downtrend. You can see I've fibbed the daily, that's last month's high, to the most recent low. And from here, I'd like to see at least another test of 1.5, which is going to be in our 4-hour Dynafibs, a little bit below the 50% fib. I'd like to see a retest of that and then move to the downside. Of course, we do have the 4-hour 55, which price may react to, but I think that's a little bit less likely to be in play this week. The preferred short is going to be to come up to the 4-hour 200 again and then fail there for a short. One of the members did ask about PFT setups on Forex, and it was specific to Pound USD. So PFT on the 1 hour definitely applicable to Forex, but we need to take a bit more look at the context of what's going on. So the PFT that he asked about was Thursday last week. Unfortunately, I wasn't around to get to him sooner, but I believe the setup was going to be this right here, which you can see is a valid PFT if we're looking at the 1 hour Dynafibs, like normal PFT reaction there. We even closed just slightly above the midterm fib, although this put us right at 149. Yeah, the close was just below 149. Let's assume even if this had closed above 149 is a valid setup and take a look at that. So we need to look more at the context of the trade. You can see that just from the 1 hour Dynafibs, without even looking at the 4 hour, that we've been in a pretty good downtrend on the 1 hour. We have this large spike, which of course is FOMC. Now we need to take a look at the higher time frames, which we've just done in the weekly analysis for this week. So you can see that we're still in a downtrend here, so we don't want to take a long, as that would be a counter trend. So even if you were going to take a counter trend trade, this is why I recommend adding the additional indicators to the charts for Forex, because of reactions to news like this. You can see that the first reaction to the news was halted by the 4-hour 200, and then here where we have our PFT set up, just above that is the 4-hour 55, and you can see where our overall trend is down. We've moved up due to news, and we pretty quickly moved back down. This is a pretty major move down. We went from a little bit above 1.51 all the way down to 1.48 basically. So this is just a pullback in our move down, and you can see logically we stop at the 4-hour 55, which is just above, a little bit above 149, which is pretty common for Pound USD. It's like 149.30-ish area before we continued our move back down. So actually the 4-hour 55 would have been the item to trade around. You could have traded this on the hour. The setup would have been here, even though that's into the Dynafibs. The 4-hour 55 is going to be a stronger area to trade around in this case. So using probability, we can assume that price is going to continue to the downside based on this formation off of this bar. Now that still gives you a pretty large stop on the 1 hour, probably about an 80 pip stop, and the lowest point here was going to be around 160 pips, I believe. So it would have been an okay trade, but in this case it didn't go too far down before we reversed again on Friday. Alright, let's take a look at the Australian dollar versus the US dollar. You can see that on the 4-hour time frame, we look a bit bullish given our indicators. We have the 34.55 cross and prices above the 200 EMA, and we closed 168 pips up last week. However, I'm not ready to call the downtrend over yet. It's been languishing a bit, but we're still below 8,000, and you can see that we're still below the daily 55, which we had. That's where the move up after FOMC stopped. So you can see that this may be one of the pairs that provides us a good Monday trade. Looks like we're forming a decent pin bar, or at least a doji, depending on where we finish before London session starts, off of the daily 55, which is right around 78.6 fib. You can see it's also where FOMC stopped. I would even take a spike up to WR1 and see if we get a reaction there. And again, 8,000 is going to be kind of the line in the sand for me before I stop considering shorts. Now, that being said, if we do break above the daily 55, we have to watch out for a break above, a move down, and then a move up to actually get to 8,000 around the daily 55. So be careful if we get above there. But currently it looks like we're probably going to get a short setup involving the daily 55 pretty soon. Okay, let's take a look at USD versus the CAD. Just like the last two pairs we've looked at, this is a fib on the daily. It's the last month's low to the most recent high. You can see that we've already had a reaction to the 4-hour 200 a bit. I'd like to see another retest of that to take a long early in the week. If we do break below there, we do have the daily 55, which is going to be around 124.50, and 124 has been a pretty good support area in the past. So I will definitely look for a long from the daily 55 if we do break below the 4-hour 200. However, I think it's pretty likely that we may just see a long off the 200. Alright, Euro USD, we have the same scenario for the fib. As you can see, our indicators are still all red, even though we closed 341 pips up last week. So this is, the fib on this is last month's high to this month's low. We've already pulled back to 109, basically. Right around there, not quite to 109. But right now we're just above 108. So we could see a reaction to that area if we fail to break above the 4-hour Dynafibs, which I would like to see a move up into them a little bit more first. But then if we move below, this could provide us a short opportunity from basically where we're at. So it's been a little bit of a support and resistance area. You can see if we draw the line. I'm sorry for all the extra arrows this week, guys. I've really got to get a new mouse. The only problem here is we do have the 4-hour 55, so just be careful if you take a short from this level. Preferably, I'd like to see a move up to around the 1.1 area, which is going to coincide with the 4-hour 200. That should definitely give us a good short setup, unless we're in for some seriously major pullbacks against the dollar, which I don't see that happening. We do have the daily 55, not too far above the 4-hour 200, so that's one to keep an eye on as well. But I think the area to look for this week is definitely going to be another retest of the 4-hour 200 to short. All right, let's take a look at some of the yens. We'll start with pound yen. You can see we're currently breaking below the daily 200. This could provide us a trade, break below, pull back, and then move down again. However, I'd rather see a pullback to the daily 55, 4-hour 200 combo. The reason being is I think we're likely to see a move higher on USD JPY and a move lower on pound USD. So if that happens at the same time, we're going to get a lot of whipsawing back and forth on pound yen. However, if we do see pound USD moving down and USD JPY moving down in sync, that could provide us a really good short on pound yen. Just be careful and monitor USD JPY closely for support, because if we reverse pretty quickly, that could pretty much eat most of the profits on your pound yen trade. All right, here we have AUD-JPY. This is fibbed on the daily for a short, even though we're, according to the indicators, we're bullish on the 4-hour. I'm still going to look for shorts at least in the beginning of the week, because we're still below 95 basically. There may be another area a little bit below that where we can indicate, but you can see that we're near the top of the range where we've been at. So let's go back to the 4-hour again. So the fib is last month's high to, I believe, last month's low. Let's take a look at that again. Sorry. This is the one that's odd fib for the week. So I've fibbed the high from 2 months back, or not the high, but this leg down basically here is what I fibbed. Let's take a look at this on the 4-hour. You can see that we tried to make a move back above the daily 55 already this week. That's not too surprising, given we're close to 94, but you can see we're already starting to come back down. So I'll take that move back below the daily 55 in that formation to short this session in London, if that's what continues to happen. Otherwise, look for a short around WR1 at 94.14. 94 is a pretty big area. And then we have the daily 200 at 95, which that's going to be, if we break above there, then shorts may be off the table, but that's definitely an area that I would look to short from. But I think the first area that we need to watch out for is definitely going to be somewhere between the daily 55 and WR1. Just have to see what happens over the course of this London session. This is Euro JPY, again another fib from the daily last month's high to the most recent low. We've already started to move down just a little bit this week already, so I'd like to see more of a move below the 4-hour 55 with a pullback and then another move down to short. That of course will coincide pretty closely with 130. Alternatively, if we don't keep moving down in that pattern, we do have the 38.2% fib, which is going to be inside the 4-hour Dynafibs. A move into that area, which is going to be roughly 130, 50, 130, 60. That area could provide a short. Otherwise, a pullback anywhere in this area, anywhere from MS1 to the 4-hour 200. It's going to be the 132 area. That should provide us with a good short setup if we're going to continue with the downwards move. Of course, just like the rest of the pairs, we do have the daily 55 close by as well, so we may see spikes up to there depending on how much movement we get this week. Alright, last but not least, let's take a look at USD versus the yen. So we are currently, looks like we may be forming some reactions to the 4-hour 200. We could take a long from there this London session, depending on what happens. I will be looking out for that, but preferably a retest of the daily 55 right around 119.50 to trade. I'll like that scenario better if we don't move up above the weekly pivot before coming back down. I'd like to see in the beginning of this London session a break below the 200 to test the daily 55 and then a move back up. If we do break below the daily 55, or we move up first and then come down, we do have 119, which could be a pretty good support area. 118.75 has been good support in the past. Of course, we did have the EMAs down there a few weeks ago when we were trading off those levels. However, I think that's still real good horizontal support and resistance area. It may just have moved up slightly at this point since the EMAs have also been moving up. Price in general, so we may see a spike down to 119. If we do get a spike down there, I'll be pretty tempted just to take a long if we move down and stop dead on that area. Alright, that's going to be it for me for the week. Good luck, everybody. Happy trading.